Hello everyone and welcome to Finovate TV. My name is Julie Muhn, Senior Research Analyst with Finovate, and we are here live at Finovate Fall 2022 in New York. Today I'm joined by Alexa von Tobel, Managing Partner of Inspired Capital, a venture capital firm that she founded in 2019. Alexa, welcome.
So happy to be here. Thank you so much for having me.
Yeah, so let's jump right into the questions. So you just got off stage talking about VC funding. And obviously fintech deal flow has changed a lot in the past 8 months or so. Can you talk about the funding environment at the moment and what we can expect in the future?
Sure. I mean, I think the headline is there's just truly gobbles of dry powder. There's so much, oodles of dry powder is a better word. There's so much money out there, and I think for the right founders, the right businesses, the right ideas, companies are going to get funded. I think, of course, money which felt free last year and the year prior, those days are over, and we advise founders to just almost ignore the last 2 years. It's not productive or helpful to moving forward. But money's there, money's ready to back companies. Inspired is on our second fund. We have lots and lots of dry powder and ready to actively invest, and looking for the best builders, and this is when the best builders come out. I think when times get tough is when you see sort of your more resilient, committed founders say, I want to go build a business and I want to meet those founders.
Great, so that takes us right into the next question. So obviously, kind of experiencing a downturn at the moment. And while others are a little bit nervous, you mentioned that this gets you excited. Why is that?
Yeah, I mean, I think it's a little bit bad. So my personal history is I dropped out of Harvard Business School in the heart of the worst recession in 81 years. That was back in 2008. Moved to New York City. I was a kid. I was 24, 25, and built LearnVest, one of the first fintech companies. It wasn't even a category at the time. And I think that those sort of mission-oriented, committed, very real builders who are going to build no matter what, come out during these moments and they see the big problems, the big gaps that are existing. And so I'm looking for those founders. And I think last year, being a founder felt like a career. Lots of people did it. It was easy. Yeah. There weren't a lot of trade-offs. There's a lot of trade-offs you have to make now to be a founder, and I think that just those people who really, really want to do it for the next 10, 15 plus years of their life are going to show up. And so, again, my hands up, I want to meet every one of them, and I'm very excited for that.
Cool, great, all right, yeah, we're here for it. So switching gears a little bit, talk to us a little bit about the gig economy and how you see that changing retirement in the future.
Yeah, so I won't bore you with the details and the facts, but here's the headline. The concept of retiring at 65 or 70 is almost not a great one. People love their jobs. People enjoy being productive and in community and useful every day. And in fact, the second that you stop doing that, you quickly physically decline. And so I think what we're seeing is a few things. People at 65, 70 are saying, I don't want to go to zero. Why is it I either work full time or I'm at zero? I think we're seeing a lot of people say, I still want to have some way to make some income, and the gig economy is perfect for that. You can work 1 or 2 days a week. You can be an Uber driver. You can pick up, TaskRabbits. You can do other sort of things. But what we're seeing is we've exploded this opportunity and made it accessible and reasonable for people in that age category to say, I'm not ready to do nothing. And my own mom doesn't want to fully retire. She's like, I love what I do and I want to continue to get to do it a few days a week. So we're seeing that, first of all. And then secondly, I think we're just seeing young people on the opposite end of that spectrum recognizing that this sort of old culture of I'm going to work for 40 years with very little breaks and no gaps in between and then retire is sort of a really old-fashioned way of thinking, which is why not make your own flexible schedule, work the days you want to? It's better for supporting families. And then there's lots of scary things with that, which is where's your 401k? Where's your health benefits? And how do you make that work? How do we make sure you save enough for retirement? And so at both ends of the spectrum, I think there's a lot of really great opportunity.
Yeah, great. So yeah, something to look forward to, something to innovate for sure.
Absolutely.
Okay, so looking towards trends, general fintech trends. So we've obviously seen a lot of fintech trends go up and down. 2012 was all about card-linked offers. 2015 was robo-advisors. Last year we saw buy now, pay later. What's going to be the next huge explosion? What are you seeing coming?
I think there's a lot of things coming. I think we're starting to see, I think just in general, Web3, blockchain, really finding the appropriate uses, the use cases. Where does crypto make sense to use in everyday life? And I think we're just going to see a lot of really interesting things come out of that. I also think we'll see a lot of the projects that didn't make sense go away, which is actually going to be really productive for that environment. I still think frictionless payments, you heard the stat, 12% of payments are digital across the planet. That's obviously going to move dramatically over the next 20 years. And so I think there's just a lot of opportunity there. So those are just two categories. final one I would say is I think InsurTech is going to have a moment.
Yeah, that's interesting. Yeah, I think people shy away from the InsurTech space because of, it's heavily regulated. So it'll be interesting to see how they get around that. All right, I think we have time for one more question. For fintechs out there, what advice do you have for those mid to late stage fintechs with an upcoming need for funding, that maybe VCs aren't quite that excited about at the moment?
Sure. I mean, I think the major thing is unit economics. Growth at all costs, those days are really, I think, over. And I think it's now, are you growing responsibly, reasonably? Do we know how, at the end of the day, if we put a penny in your business, do we know, or a dollar in your business, do we know how to make it come out with two? And really understanding the fundamentals of business model, those are going to be far more important than did you grow 100% last year. And so really understanding your unit economics to the decimal point for every CEO and founder is going to be critical. It's not something you outsource to your CFO.
Yeah, very good. All right. Well, thank you so much, Alexa. This was great.
Thank you for having me. I'm happy to be here.
Yeah, this was Alexa von Tobel. I'm Julie Muhn. Thank you so much for watching.